jump into one of the strategies that we see, Brian sees from a buyer side and I see from a seller side and buyers, which is seller concessions. So first question I have for you right here, Brian, is what is a seller concession? A lot of people don't even know what that is. Some buyer comes in and says, I want you some seller concessions. Does that mean like,
It's like
what does that mean?
It sounds
Yeah,
awesome.
yeah, what is it?
If you're a seller, it doesn't sound that awesome. So it's so a buyer buying a home has closing costs. They're going to put their own down payment, so their down payment's going to be specific to their price and how much, if they're putting 10% down, 30% down, whatever the number is. Now the concessions come in with, you have closing expenses, like you're talking about interest rates. There's a cost to getting a loan, there's a cost to getting the title company, there's a cost to the county to transfer your property taxes.
That's right.
So you take all those costs together and they can be credited from the seller's funds. So if they have the house for, let's just use $575 as our example, but they took $15,000 from that $575 and gave it to the buyer to pay for their closing cost. First, that paid for pretty much all their actual closing costs. Then they would leave funds that they could use into their financing. So that could be going towards rate buy down. So if the rate's today is 7.5, and you can get it to 7.25, fantastic, right? That helps the buyer. It's an incentive in a lot of cases, and builders use this as an incentive to show you a better payment while they still have this really high price. So you can keep the prices high, and maybe that's kind of the conversation around the median price remaining where it is. The sales price is coming in based on the price that transfers, the two parties transact, but the concession or the closing cost credits could be used to the buyer's advantage to pay down points.
So there's a lot of stuff right there that you just covered. So number one, we see a lot of builders, because they know they're in a pinch and they have inventory coming up, that are offering seller concessions in lower interest rates.
Well, they're not in the business of owning homes, right?
Yeah,
they're
so
in the business of selling homes that are built, like building the home and getting rid of it.
So here's the number one tip for buyers. Go look at new home builders. Try and find some homes that they have an inventory, meaning that the person in the office got the upgrades, they built the house and it's sitting there in inventory, especially here in the next 2 months, because builders under pressure because they want to get things closed by the end of the year. They have a certain period. So that's one way you can really take an advantage.
It's like buying a car on the last day of the month.
Yes, because there's a big rush to get all the numbers in to make you look better as a company.
Absolutely.
But the number one thing that you need to do if you're going to go look at new builders, call a realtor. We have so many people that call us that they go into the real estate office without a realtor to start, and then all of a sudden they are overwhelmed by the contract. The builders are using their own lender, their own title company, and it's still a big process that you should be represented by a third party. Consider using a realtor, and it's free. So that's just a little plug for that. Secondly, we're talking about, you talked a lot about,
well, there's limits.
Seller, we'll talk about limits in a second, but you're talking a lot about different types of, what's the right word? Reoccurring and non-reoccurring closing costs.
There's different types of closing costs.
Yeah, what is it? What's a non-reoccurring, what's a reoccurring, and do the limits matter, or is it just the aggregate of reoccurring and non-reoccurring?
Well, when you get a settlement statement, it's going to say how much your closing costs were, right? So the closing cost total can, both recurring and non-recurring, which I'll explain, can all be paid for from seller concessions. So let's say that you have non-recurring closing costs. These happen one time. So if you pay 1 point on your loan, that's a one-time fee.
What's the point?
1% of the loan amount, and that can help you offset the current interest rate down to a lower interest rate in return, right? So you're paying up front for the advantage of a lower interest rate, but you can use the seller's funds to pay for it.
So keep in mind that 1 point, a lot of people think it's off the sale price. It's off the loan, correct?
Absolutely.
So if you're bringing $100,000 in on that $500,000 example, 1% off 475.
Yeah, so
Okay,
47.
so that's important. Keep going. This is great.
And then you've got an appraisal, happens one time, so that's not going to recur again.
Okay.
You've got the Washoe County is going to charge you a transfer tax. That's going to happen the one time. Now, your recurring closing cost would be your continual property taxes. So you will have property taxes, and that's a recurring fee, happens in the future. But when you close, you're going to pay some of it. You're going to pay the seller back for anything they've already paid in advance. So say it's November, so they've paid through the end of December, and you're going to take over the property on December 1st. you're going to pay them back for that 30 days that they already prepaid your taxes. So that's a recurring fee.
Okay.
And then there'll be a future tax bill that we can plan
HOA
on.
fees.
Your insurance.
Insurance, yeah, those are all now.
Recurring.
So let's talk about limits, because you're talking about two different types: reoccurring, non-recurring. Is it the aggregate for the limit?
Total, yeah.
Okay, so now we're talking about government-backed loans. So if you're going to an owner finance, that's a different discussion, correct?
Yeah, well, I mean, you can just write it into the deal.
Okay, so if you're owner finance, that's a different discussion. But we're talking Fannie and Freddie. What is a government-backed loan, and what are the limits for the different programs?
Well, I mean, there's government-backed loans is in the sense that based on how much you borrow could determine whether you're eligible for certain types of loans. So Fannie Mae, Freddie Mac have loan limits that were this year will expire at the end of the year at $643,000. It's actually going to go up pretty significantly. So there's already lenders offering loans over $650,000 in anticipation of their new limits. So as long as you're borrowing less than, let's just call it $650,000 or $750,000, actually, sorry. Then you'll be eligible. Your loan could be sold to Fannie Mae and Freddie Mac, but they'll only buy it if you follow their rules. So if you're putting 10% down,
Okay, so if you have 10% down,
you could have 6% of your price. So the sales price of say a $700,000 house, 6% is a lot of money.
sale price or loan?
The sales price.
All right, so it's
The
different.
concession is based on the sales price.
Okay, so
but
if we're
it
talking about
applies
5%.
to your loan fees and other recurring and non-recurring.
So if we're talking about a $500,000 loan, you could get $30,000 from a seller, up to
for a
correct.
10% or more.
for a 10% conventional, right? That's conventional. Now, all right, keep going, because there's other. What's the next program?
So an FHA loan is similar. So FHA has different loan limits by county. So specifically, it's a little over $640,000 for the Washoe County FHA loan limit, but that'll allow you to put 3.5% down and still get a 6% seller concession, maximum towards your closing costs, like buy downs. People use them for short-term, long-term buy downs, and like I said, all your other closing.
All right, so we have conventional 6%. FHA is 3.5%. What else is there?
Well, you can do a conventional loan with less than 10% down. It's just you're limited to 3% of the price towards seller concessions if you're putting less than 10% down. So that's the only other difference.
And a conventional less than 10% can go how low? What is the limit? Like
3%.
3%. So
Yeah.
3 to 10%, you only get 3%.
That's the
So
max.
that's something you need to consider if you're a buyer.
So you could look at that and say, well, if I did the FHA loan, I could have more money from the seller if the seller is obliged to agree with me on this. You got to get the seller to buy in first.
Right. We'll talk about that in a second. And then VA loans. What is the limit on VA loans?
Technically, there is no limit on the amount of concessions to the seller, but it's limited on the actual closing cost. Up to 2 points maximum could be paid towards discount points, and the rest of the closing cost. But they allow you to do something really interesting on a VA loan. So if you have, if you use the maximum 4% seller concession, you can actually use that towards all the closing costs, and they'll allow the seller's funds to pay off a debt. So if you're almost paid off on your car, let's say you owe $5,000 left on your car, you can include that into your VA loan from the seller's concession. It's the only loan program that allows it.
Okay, so if you're doing a VA loan, you better call Brian. This is why we bring Brian in, because a lot of people don't know that.
It can get complicated.
It can get complicated, so keep that in mind. 2 points if you do, without that. This is what's limited by the VA.
By the VA.
Okay, so those are things that you need to consider. Now, a lot of deals are getting done. So if you're out there being a buyer and you're looking at houses and you're like, wow, I can't afford $550,000, talk to your realtor or call us and start thinking outside the box. Like, all right, well, I can get up to 6%, $30,000. So I pay the higher fee, but I'm clawing back $30,000 out there to use to pay off a lot of the reoccurring, non-reoccurring closing costs and buy down rate. And then that way you get into a house that you may not know that you can afford and make it affordable. And then in the future, hopefully when rates come down, you can refinance, correct?
There's no prepayment penalty, so you would be eligible to refinance in the future. If you're using that much seller concession, the whole point is to avoid having to refinance.
Right.
Take advantage of a lower rate that's not available to you today. I have no idea, 6 months, 12 months, 24 months from now, if you could refinance, sure. But if nothing else, you have a 30-year fixed mortgage, and if you get the lowest rate that's available now using these seller concessions, it might avoid you from having to go through the cost of refinancing.
Okay, so now if you're a seller, a lot of good ideas right now is to, in the listing, beautiful house, but right after beautiful house, you might want to say seller with a qualifying offer will have some seller concessions to help buyers. I mean, is that a good strategy right now?
I've seen that for like flooring specifically. I actually went to an open house recently, and this was one of the things they were offering was $10,000 credit specifically to flooring. I think the couple had dogs, and the floors needed to be replaced, so they recognized that, and instead of picking the carpet for you and replacing it for you, they were offering a credit to help offset that.
Right.
Now, a buyer could use that credit towards their flooring if they want. They could wait and do the flooring in a couple of years and use that money towards their closing costs too.
Right. So probably the best thing to do for buyers is to minimize all your closing costs and get a little better rate, correct?
Well, that's why you have a realtor, so you need to negotiate what's right for you as the buyer, and then that's going to have to mesh with what's right to the seller.
Right.
That's how you negotiate a deal.
So don't be just, write off a house just because it's a little higher in price. It's a good idea to go look at it and then see what is available out there.
Yeah, how long has it been for sale? More than 31 days? Maybe they're open to some suggestions.
That's great. Now let's talk about no limits on owner financing, correct? So if
There's no, it's
you
the
do whatever
Wild
you want.
West.
Yeah.
You can do whatever you want.
And that's another thing that you can do, a strategy if you're a buyer, last strategy out there, pro tip, is if you're a renter, if you find out that a seller owns a house 100%, you can have your realtor ask if they're willing to carry a note, meaning that is the seller willing to be the piggy bank, and that gives you a lot more flexibility as a buyer. There's a lot less regulations you have to follow, correct?
I mean, I don't know of any specific regulations. I'm sure there's a couple from the state
There
of
are.
Nevada, but there's forms that the real estate division has put together to make sure that that's done on the up and up. But really, it's going to come down to if a seller doesn't owe anything on the house, right? That's their equity. They can decide to lend it to you as part of the deal. Like if they're selling a $550,000 house, and they'll take $50,000 down now,
Right.
and lend you the $500,000 at whatever interest rate you can negotiate. Yeah.
Consider
Absolutely.
that. So I know that's not what
Well,
Ryan would like to hear, but
I see a
they
lot
get
of vacant lots go that way because people will,
it's hard to get mortgages for a vacant lot.
Well, you want to build your future home on it, so you don't want to take out the bank loan yet. You'd rather save that for a bank loan to construct the house, probably.
All right, so we're not going to give out any more secrets because we want them to tune back in. So we're at the end here. I know it's a little longer one, but a great discussion on what's going on in the market. Last topic I want to talk about real quick is Brian's crystal ball, where do you think rates are going? I know it's on the spot. There's a lot of stuff going on in the world.
So as of October 31st, I'll call that the rates peaked. So I think the rates are going to come down, but not substantially. So if they hit 8% at the end of October, we've already seen it pull back pretty significantly into the mid sevens in November. I anticipate that next year happens to be an election year. I have no idea if that's going to have a sway on things, but it makes me feel like we'll see lower interest rates, maybe with maybe 6.99% can come back around pretty soon.
That'd be great. So, all right, well, like our videos. If you find this video useful and you have a friend, family member out there that's buying a house, wants to know about seller concessions, feel free to send it to them. It's going to be on YouTube. Like our videos, tune in. Our goal is to crest 5,000 views on this one. So let's do it.
Let's do it.
Thanks for coming in.
All right.
Until next time, you guys enjoy this nice fall weather, and we look forward to getting you caught up next week. Take care. Thanks.